This financial markets update is for September the 24th, 2010. I will be highlighting gold, silver, platinum, and some of the reasons why these metals keep going up. Gold soared to a record high above $1,300 an ounce today, while silver jumped to a 30-year high at $21.44 per ounce. Gold goes up when investors are scared to put their money in the stock market, and they're devaluing the dollar, which I listed down here, currency devaluation, which is causing gold to rise even more. Some of the top hedge fund managers on Wall Street are putting their money in gold, and they've been doing that over the past year. In this video, I'm going to highlight the reasons why gold's going up. I'm going to give you guys some insight of what the targets are over the next year, and I'm going to show you some critical levels on the charts. We're going to start off right here. We're looking at the gold futures contract, and December of last year we put in a high at $1,227.50 per ounce. Ever since then, we've been in a consolidation buying mode. During the 6-month period, we actually finished up at a high of $1,266.50, which we put in July. We then had some short-term selling in it, but then we met support at this 100-day moving average. When we hit this low, suddenly you've seen a huge burst of volume come through. Look at this volume here. This were the people that knew gold was going higher. They were just waiting at a decent level to buy it. And this blue line right here is a 200-day moving average. For people who don't know what that is, the 200-day moving average is what all investors look at to determine the overall trend of the security. If we're above the 200-day moving average, that's bullish. If we're below it, that's typically bearish. So we draw this white line right here that you see is this $1,266.50 level from the early July high, late June. We draw this white line all the way across here. I knew that if we got over this line, $1,299, $1,300 level would be in the cards. It was a huge psychological level. You've been hearing people talk about it for a long time. All the gold miners were coming out 4 to 5 months ago saying that it's a realistic level, this 1,300. We're now here. Some scenarios that could happen with gold, it could just keep going up. I see 1,309 being hit by early next week, being that the Chinese markets are closed to a public holiday. They open next week, and I don't see them selling any gold. I see them keeping the prices firm. So my next target is 1,309 on gold. Now what could happen, and this would be healthy, some people that were in at 1266 and made this move all the way up to 1,300 and made 40 points, some of them people are going to be selling over the next week. If the selling continued, we'd be looking for this 1266.50 level to test as support. That's an area where people that think gold's going to 1,500 will step in and start buying. The dollar's going down. I'm going to show you the dollar chart right after this. And as long as the dollar keeps going down, gold will rise. An analyst at Commerce Bank, his name is Daniel Bryceman, came out today and said we expect gold prices to be above $1,350 per ounce before the year end. That's a pretty bold call. So that's pretty much saying that he thinks we might have a little congestive period like I just pointed out, and then presume back up to $1,350 per ounce, and I think that's very realistic. This chart right here is the US dollar futures index, and we put in a high June of this year at 88.90. We had a bunch of buying going on. We then had a serious decline from 88 to 80 in a matter of a month and a half. Our low from December of 2009 is 74.21. This is the white line that I've drawn all the way down the screen. Right now we're flirting with the low that we put in August, which was 80.17. That's this white line that you see right here. Right now we're trading at 79.62. All right, so that's well below this 80.17 level. If things don't improve with the US dollar, I see us eventually retracing this 74.21 level, but the next level we could be at is approximately 78.50, and that could be pretty quick. The Fed Reserve hinted this week at more stimulus spending if the tepid U.S. economic recovery cools further, sending the dollar down. So the Fed is saying that they will draw another stimulus bill if they have to. And that's only going to make the metals go higher, and that's going to make our dollar go down, and eventually inflation will come. And something else I wanted to highlight to you guys, the Fed Reserve said, should the global recovery take a turn for the worse, it is clear the bank is prepared to take further action either through buying bonds or credit easing through buying private sector assets. Listen to the last thing I just said, through buying private sector assets. The government is talking about buying the stock market if it goes down and things can't be stabilized. That is an interesting statement that I just told you about, and we call that the plunge protection team on Wall Street. The market is being manipulated. That's a fact right there. Jobs numbers just came out, I believe yesterday, and they were 12,000 over, which put us up at 465,000. They keep declining, but today the S&P 500 is up 23 points. That right there is what we call the plunge protection team coming in and buying this market up. Now looking at silver futures, and the all-time high was 21.44. Today we put in a high of 21.48. You can see this rally from late August rallied all the way up from $18 to $21.48 per ounce. So about a month's time we rallied 3.5 points in the futures market. Now you see this blue line right here, as I pointed out before, this is the 200-day moving average. So only one time we got over the 200-day moving average under it in the last year, and you see what happened right when we got under it? There was massive buying. People knew that this was going higher. The smart people on Wall Street were the ones buying it. And we've pretty much held above this 200-day moving average this whole rally. All the moving averages are turned up. What we're going to be watching towards this next couple weeks to see if the silver could hold above this 21.44 level and then presume higher, possibly to the 23 level. Of late to October of 2008, silver put in a low of 840. That's after we made the all-time high of early 2008, 840. Ever since then, we've just been ripping upwards, and that's where we get to our 21.48 level. So in a little less than a 2-year time span, we've went from 840 to 21.48. $13 in silver. That's a very fast rise. Now if the market did improve and things got better, silver could bounce off of this level, this 21.44 all-time level, and come down here and retest this trend line. It would look something like this: consolidation and then a move lower. I think there will definitely be more buying all on the way down of all these precious metals. The chart I have pulled up now is platinum futures, and we put in a high in platinum of 1759 late April. That's this white line you see me draw right here. Now in January we put in a high of 1654. That's this white line we drew right here. As you can see, we came down in platinum in May. We sold off a little bit. You see this massive amount of volume. They came in here, they bought this thing above the blue 200-day moving average, and we've just been consolidating, making new highs, headed back up to the April high of 1759. That's the target for our platinum to go. If you see platinum get above this 1654 level, which is this white line, I assure you that 1759 will be shortly thereafter, and it could be a pretty fast move. We're still bullish on this chart. You draw your line, which was at a high that we made in June, which was at 1609.30, and we're well above that. The 10-day moving average is even a little above that. We really need to break this 1654 to get a higher move, pull back, and then we'll just consolidate and head up to this 1759 level. A worst case scenario for platinum is if the economy improved a little bit, we'd bounce off of this 1654 level and come down and start testing these moving averages as our support levels. But until we break below this 200-day moving average and hold, which I don't see happening in the next few years, you stay bullish on all the metals. In this last year, gold and silver prices have soared about 30%. This chart right here is the gold chart. It's an intraday chart. It's a 1-minute chart. And what we did is at 9:15 this morning, we came in, we put our high, we broke the all-time high at 1301. This red line is the 1300 psychological level that everybody's been looking for. The market opens at 9:30 a.m. and that's where we draw this yellow line right here. This one stretching all the way across, that's the opening line. That's what people gauge the trend of the market for the day with. Now we consolidated a little bit in this area. We put in a flag and we broke out of the flag here and we ran all the way up and we retested this 1300. Now there were a lot of people waiting to sell their positions at 1300. They have, it's called a sell order, and they put them in and they just wait to get hit. So the guys that got long at 1266, they already had all their orders in here, and that's what you see taking place right here. You see this massive amounts of volume, 2,000 contracts in 1 minute. Those were the people that saw the 1300 and were just trying to take some profits because they've made, $35, $40 per ounce. But then you saw additional buying, and now we're just consolidating above this 1298.50 level, and it looks like they're trying to push it back up to 1300. Alright, so UK inflation was proving far stickier than in the US. The Fed thinks core inflation will plot a course below its comfort zone. Central projection of the Bank of England has UK consumer price inflation flirting with the upper boundary of the zone for a while longer. So the UK central banks are saying that inflation is going to be on the table for the next year and a half. After the Fed said that, it was unequivocal in the response to the central bank's remarks. Listen here now, this is where it gets interesting. The 10-year bond yield fell 14 basis points to 2.98%, not far from our August record low of 2.79%. It was the biggest one-day slide for more than a year. So after they came out and said that there was going to be inflation sticking for a while longer, the bond market fell more than it had in the last year in one day. And that's right at August lows. That's unbelievable. Another interesting fact to note, Julian Jessup, which is a bigwig over in London, said that gold prices will stay high for the next few years due to fears of runaway inflation or a dollar collapse. A dollar collapse. They're calling for a dollar collapse now. Prices should continue to be supported by strong demand for a safe haven from other potential economic and financial shocks, such as a U.S.-China trade war and the breakup of the EMU. As you start paying attention to this kind of stuff, you'll start seeing it a lot more often, because I see at least 2 to 3 times a week people talking about a China trade war and a dollar collapse. For gold prices to not keep going up, the economy would have to improve to the point where the Fed felt it didn't have to print money. The dollar would have to strengthen and the problems in Europe would have to end, which is not happening anytime soon. I hope I've given you guys some great information. I hope you enjoyed my videos. Please subscribe.